Hello, everyone. Happy New Year, compliment of the season. Welcome to 2022, and this is our first YouTube breakdown in trade hours in the year 2022. 2021 indeed was a great year, had a lot of ups and downs, but came out very good. And 2022 promises to be a very fantastic year. So let's get down to business. We know the chart is still sluggish, price is still moving very slow and all. So this week, though the market is opened right away, and we might see some opportunities this week, but I don't expect the market to do much. But notwithstanding, whatever the market gives, we take whatever opportunity it present, we make the most out of it. And don't forget, subscribe to our YouTube channel, like this video, comment, so that when next we'll be having um uploads on YouTube, you will be aware. Make use of your time well, make use of the resources we post, and don't forget to also be in our Telegram group. There's much going on there. So let's get down to business. This is the DXY, and we know how we do it. We always move from the DXY because it gives us the direction or the directional bias of the dollars, and we tend to use this. It actually tend to help us when checking out the USD correlated pairs and orders and order. So right here on the DXY, so the price has been in this up move. Price made this move, and we had this new range, and now price is actually consolidating. Right here we are on the daily time frame. Right here we are on the daily time frame, and price is actually consolidating, creating this high right here. So let's say we could catch price. Let's say we could catch price. Now on the daily, we've seen what price is doing. This is basically what price is doing. We have this equal low here. We have this equal high here. Now, what do we think price wants to do? From the way we trade, we have this imbalance right here. And this should be the 50% of the imbalance, which is below this liquidity area X. And right here, we have another one up here. So if we should go back to the daily time frame, we're likely to see this little order block right here, that little open order. We can see some other ones right here, but I don't think price want to come this deep personally. So I would like to see price do something like this. I would like to see price come down, make its way down to this point. Now, the way price starts moving down right here will give us a clue if we are going to see a move to the upside, because the moment you begin to get this accumulation in form of patterns, and just know that okay, price is actually trying to do something, or we might have an accumulation. We might have this kind of accumulation where you just see price begin to do things like this, and others begin to get stacked up, and you just see something like this. Then you get the final drop, and you get that final drop before the upward. So the moment you begin to see this kind of accumulation and this kind of slowing down, you begin to ask yourself, what is the market trying to do? Why is it slowing down like this? So then you brace up yourself for the move to the upside. And when we are looking out for the move to the upside, our next target will be this high right here. That will be our next target. And going back in time to see what is actually at this point. You'll go see we have this open order right here, and we saw that the 50% has actually, the opening, I'm sorry, has actually been dealt with, but we still have the 50% to deal with. We still have the 50% to deal with. And if we have the 50% to deal with, and below that 50%, we have this liquidity right here. So we won't be surprised to see price either climb as high to this 50% or come to this area right here. But I'm anticipating for price to get to that 50%. I'm actually anticipating for price to come right here, since right here is a liquidity area, equal high. Then we'll begin to see price begin to stack up the orders, begin to get some movement like this, stack up until you'll see price do this. Then from there, we're likely to get a very nice drop back here. Now, you should understand that the market move in very systematic ways. The market doesn't just go straight, turn back, go straight, turn back. The market tends to slow down before it makes reversals. It tends to slow down, accumulate orders, then before you get that sharp reversal move. You understand? That is the reason why I'm using all this as a slowdown method or a slowdown technique used by the market. So if we're getting this on the DXY, we still have a room to the upside. It's very possible, but personally for me, I don't see the DXY going higher for now. For now, I don't see the DXY going higher for now, because we've actually been bullish on the US dollar. So I feel this is just an area of consolidation, and should allow it to consolidate. Although, you know, trading in the ranges is something very nice to do and something very easy to do. You just trade in between the zones and the areas. Now let's go to USD CHF. Let's go to USD CHF, which has a direct correlation with the DXY. Let's go. Yeah, so I marked this up out, but we're taking it out right away. We'll be taking it out right away. And here we have the USD CHF with several areas you're looking to get in. So we have this area, we have this liquidity right here. If we should go on a higher time frame, let's say the weekly time frame, let's see, we have this liquidity area right here. So are we going to get a drop this week down to this point before we see price go back up? Maybe, just like the way we are anticipating a little drop on the DXY. Or are we going to trade in between these areas? Or are we going to trade in between these areas? Let's go to the 4-hour time frame. It is actually very possible for us to trade in between these areas and respect this block right here. This block right here. Though the opening of this other block has been dealt with, but you know, there might still be orders left here. And you know, the highest point of order is at the opening. Then we can still have orders at the 50% area. You can still have orders at the 50% area. So if we are to look at this the proper way, we're going to mark out right here I'm going to mark out this point here. We're going to mark out this point. Then we'll make these opening, the distance between the opening and the 50% zone area. The zone area. So you're likely to get a drop to this point, a drop to that point, then price will actually do either a move to the upside, a move to the upside several places, or we actually get something like this. Okay, price might move from here, then we'll get that drop. Then we'll get that drop before we have the final move. The same way on the DXY, we're having an order block below. That is the same way we're having one right here, in which some of the orders have been taken. You know how they do their thing. Sometimes they just, if the institutional candle was moved or was created with around maybe $200 million, you'll see that sometimes they come back here and just pull out a little bit of the money, then allow the rest to run until they're back there. So we might just get this move to the upside, and then we'll get this drop before we might see a move either. So this IP area, and you know right here we have structured point. We have that liquidity equal high. So the price will be looking to go back. You can see how price did something here around this equal high. Price just sniped into it aggressively, and we saw how price dropped. So this is what the institution just do. They create liquid areas, liquidity areas, areas they know that stop losses are likely to be around there, or they create areas that they know retail traders will be attracted to. The moment you're attracted to that area and they've seen that, oh, there's enough order pending there, enough orders, enough stop losses pending. Wow, they just take it out. And let's see how many pips they dipped into it. Let's check this out. Let's check this out. Good, 24 pips. So both breakout traders, support and resistance traders would have been trapped in here, because some breakout traders would have been, oh, okay, this should be resistance area. It will break. We'll have a break and retest, and we are up. Yeah, so many traders trade away. Then some people would have set their orders here with stop losses right above this place, 10, 15 pips, 20 pips. You can see how price just dipped into it, collected the orders, and price dropped. So we're likely to see price come back. We're likely to see price come back to this area. If we should go on a lower time frame, let's say 1 hour. Okay, let's go down, because if you understand candlestick psychology very well, there's an open order right here. This move here caused an open order around here, so price will need to come back to close that order. So that is why we are targeting around this area, or this IP area to the upside, or this one right here, which is another liquidity area. So you see how the institution just do their thing. You just wait for them to cause the trap, and you trade in line with the direction of the real move. So we might see this move drop, then price goes up, and we might see some extension either to this point right here, or price goes, or price will go higher, or price will go higher. So on the H4, this is basically what you're looking out for. Price might do this. Why I'm anticipating price to go higher is if we should drop a Fibonacci right here. So we might see price also go as high as this point, or we might see price go as high as this area right here, as high as this IP area right here. Yeah, so my C price go as high as that place, as high as split. So I'm just trying to take it slow for you to get how these things work and how we anticipate our moves on the charts. Then we'll wait for the market to begin to give us confirmations before we play along with the chart. So my C price do this for USDCHF. This is basically what you're looking out for. And the next pair we'll be looking out for is USD. I'll be taking very few pairs today as we go into the week and we begin to see volatility on the chart. Then we'll begin to see more pairs during our analysis. So right here, I was expecting USD CAD to at least get to this level right here. I was expecting it to actually hit this order block right here between the opening and the 50%. Between the opening and the 50% right here. I was expecting it to do that, but you can see the institution, they will still come back to that place. They are definitely going to come back to close their orders and properly collect liquidity. Properly collect liquidity. Because when they come back here, there will be enough orders right here. Enough orders. Enough orders will be right here. Enough orders will be right at this point. So definitely they're still going to come back to collect liquidity. But there's something you should understand. In as much as they created this equal high right here, in structure manipulation still happened. We still saw how price took out this high here just to create a new second high, taking out liquidity to create new liquidity. That is what they just do. They take out liquidity to create new liquidity. And if you keep falling for the traps, yeah, that's how they keep taking your money, taking your money, taking your money. And right here, we have another one. Another one. So we won't be surprised if price actually comes to this point and we see if price comes here and gives us a double bottom, maybe a double bottom, then goes back up to this point. Goes back up to that point. It is very possible. Price is likely to come here, give us a double bottom, another liquid area. So that is how they'll keep creating liquidity. Then when you fall for the trap, you get hit. So when you see something like that, remember we are still trading in between this range. We are still trading in between this range. And we are still very much in a downtrend. Understand? So when you see them do something like this, we might get this double bottom right here. And so many people will be like, yeah, price is coming back here. Price is actually consolidating and all. Then they will take out the stop, take out the bottom. You know, they are not for you. They're against you. They're out there to take your money. To have more information about how the institution trade, just kindly hit out Tradehouse admin for us to get you started with our advanced course on how the institution manipulate the chart. So for USD CAD, I'm not surprised. Price is likely to come down here, and we might actually get even a drop. Just collect little and go back up. Then before we actually see price come down to this open order right here. We have an open order right there. So now it will be trading order block to order block. And we have this open order on the daily. So now we are looking out for the open order on H4 time frame and open order on the daily time frame. Very possible. So you see how what you look out for is just something very direct and straightforward. You're trading order blocks to order blocks, open orders to open orders, and anticipating manipulations, traps, and escaping it, and making money out of the chart. So for USD personally, this is what I'm looking out for. This is what I'm anticipating on the chart. The next we'll be looking out for is Euro NZD. Euro NZ. Just trying to touch all relevant pairs. Euro NZD. Yeah, on our last YouTube video, we explained how this, what we were expecting on this pair, and you could see how it happened. Exactly how it was explained. If you've not watched the video, kindly go back, watch that video. It explains everything of how the institution manipulates the market. We broke everything down, and just as we said, just as it was said on that video, that's exactly how it happened. That is the last video before this one on the 20th of December. This was explained. This was explained before it happened. You could see the manipulation down here. Trapped sellers went up, trapped buyers, and we could see how we got that snipe and price fell straight 268 pips. And now we're anticipating this like a pullback. Now, where are we anticipating this pullback? We've got price coming back up. Where do you think the money is going to be? So many people would have placed their trend lines right here and be like, okay, we've broken this, we're going up. And all of a sudden, they're going to get a sharp drop. So I'm anticipating price to come right to this point, because that is where I can see the most open orders. And that is where the recent open order is, right here. It's either price come right at this point here, or we get this. So this or this. Then we're likely to see price drop from here. It's very small stop, 13 pips. Get a sniper, and we continue the down movement, or we see how price might get to this point. Why I'm anticipating both points, I will explain very soon. Price get to this point, and we also get a drop. For this point, because it is the most recent open order right here, and it actually trap price because people will be buying, then to get a drop. Then on the other hand, at this point, it's the point of this. Understand? This is where the liquidity was cleared, and we have this open order. And right here, we've got this break of structure. This break of the last structure, we'll have it right here and here. So we'll take this as a pullback, a retracement before the drop. And also we have IP area here. So that is why I'm anticipating this too. I'm going to react based on candlestick momentum. I'm going to react on the chart. So see that I react from this point or I react from this point. At this point, it's just 12 pips stop loss, nothing much. At this point, we have potential, let's say 24 pips stop loss. But look at the risk to reward. If any of the above should play out, this is 12 pips stop loss for 311. This is 24 for 365. And you know, we are holding to, we have this open order here, but sometimes you just have to take the bigger open order or the biggest open order. And we have one on the weekly time frame. So for Euro NZD, this is personally what I'm anticipating. I'll take this as a pullback to our areas, either this point here or this one here. Then we should get a drop to this point. It's going to be a long ride. It's going to be a long ride. It's about 526 pips. So keep your fingers crossed. We are still looking at this pair, though for now I'm out of it, but I'll be looking for re-entry to milk the market. So the next we should be looking out for is Gbp Nzd. Gbp Nzd. I love the pairs because they tend to move very fast, and they don't guess their direction. Once they're about to move, they move. And once they are consolidating, you just know they're consolidating. Once they're moving to your take profits very quick, to your stop loss very quick, there's no in between. They are not joking. So right here on Gbp Nzd, we are still waiting for price to get to our entry. We are still waiting for price to get to our entry. Liquidity has been taken out, and now we are seeing some funny kind of movement. On the lower time frame, we can call this like an ascending wedge, or a rising wedge rather, but we are seeing a funny movement. Price has still not got to our area. If we go to a lower time frame, let's see what you're looking out for at that area. What is actually there? Yes, we got it. IPA. IPA is actually what we are looking out for. IPA, that's what you're looking out for. Yeah, that's the IPA area. And we still have an order block at the top. So let's see which price reacts to. Let's see if we get this snipe at the 50% of this imbalance here, or price will go up to this IP area. We'll see a stop loss 87 pips. Though we're not going to use that, we'll be very meticulous on this pair and very sharp on this pair. We're going to be watching it seriously this week to get a sniper entry. And right here, you can see what price is doing. Price is gradually accumulating right here like a rising wedge. In trade-offs course, we're going to explain the relationship between chart patterns and institutional play, how they use the chart patterns to deceive people. We're going to explain all that. Everything is actually in the course. And right here, we're also looking out for divergence on RSI. You can see how price is going up, and RSI is showing an arrow downwards. So it is giving us more confirmation on why Gbp Nzd is likely, or much more likely, to drop from the areas we are anticipating. So for Gbp Nzd, this is what we are looking out for on this pair. The next we'll be looking out for is Nzd Usd. Nzd Usd. For Nzd Usd, I'll go to the weekly time frame because that is where I got what I'm still looking out for. My bias hasn't changed on this pair. I'm still watching it. So I still expect price to come to this order block right here, the opening order 50%. And I'll be taking the 50% because it's in line. It's in line with some whole number level. Let me check this out again. Taking 50% because it's in line with the 500 level. It's in line. So you can actually break this down and see a perfect area where you can get your perfect entry. So I'll be watching this very closely this week, very closely this week, to see how we can get the sniper entry on this. And well, we might see this happen this week. It might not happen this week. It's all boiled down to how there's volatility on the chart, but our bias hasn't changed. We still have this on the chart, still looking for price to dip in here, Then we have this move to the upside. So this equal high right here. So for Nzd USD, that is what we are looking out for. It's around 900 pips, a potential 900 pips move. Then for Nzd CAD. So right here, I'm looking out for price. I want price to do something for me. There's an opening right here. I've already marked this out. I'm just waiting for price to get to my entry. Then I pull or trigger. We're being in a downtrend. We've actually been on a downtrend. This move, impulse corrective, and now I'm waiting for the completion of the corrective phase. That's the impulse, the corrective, the impulse, the corrective. I'm waiting for the completion of the corrective phase for us to get another impulsive move to the downside. And why am I looking at this area? First of all, we have liquidity here, and above the liquidity, what is actually attracting me to that area? To that area is the open order on the 2-hour time frame. The open order is what is attracting me. Right here, we've got this nice break of structure, and we're looking to make this lower low right here. So what is attracting me is that order block. Right, this drop here as actually, for me, I feel it's a fake drop just to lure people into the sell. I still anticipate price to go back up before we get that final drop on the chart. Then on a 1 hour time frame, let's see what we've got. Okay, no, on the 3-hour time frame. Oh, I don't know. Okay, yeah, that should be on the 2-hour. So on the 2-hour time frame, we have this open order, and I would like to work with that. I would like to work with that on Nzd CAD. So for Nzd CAD, this is personally what I am looking out for, and I'm expecting price to drop to this point because there's another open order right there. We're trading order block to order block. Another open order right here with this liquidity area. So I'm expecting price to drop to that point. The next I'll be looking out for CAD Jpy. I'm just randomly picking pairs. Yeah. So how price hit this, and look at this beauty. Look at what price did right here. There's around 370 pips. There was no opportunity to take this, but we should see price pull back a little bit because at the RSI we are overbought. So we're likely to see price just do its thing and pull back to some kind of nice areas before we get another move to the upside. Very quick. Gbp Jpy on this pair. Yeah, right here, marked out. We're waiting for it to give us a clear move. So we had this order block between the opening. Right here, we had liquid area here, but price actually didn't give us what we wanted. Price was still showing some kind of strength, so we couldn't get in. We couldn't get in on this pair. So we're waiting for price to give us a clear confirmation that it wants to drop through our RSI. So we'll be anticipating price to drop also down to this point using this Fibonacci area. Expecting price to drop to a minus 27 Fibonacci extension level, which is around 947 pips, clearing out all this liquidity and hitting this order block right here. Of course, it can go lower. it's very possible for it to go lower. So for Gbp Jpy, this is what we are anticipating on the chart. As the week goes by, and we're going to get more and more potential trades set up. So I'm just going to bring the weekly breakdown to a close, looking at the pairs we've actually analyzed. I'll see you in our Traders Telegram group, where we'll share more trade ideas. Make use of the comment section if you have any question, and also don't forget to join our Traders Telegram group. See you in the week. Do have a blessed day ahead. Thank you.